and it has volatility that tends to skew to the right tail, which means that it has many more significant up months than it does down months. And so if you have a positive skew on the volatility combined with a low correlation to other asset classes, it's kind of like a magic ingredient when you're trying to make a portfolio. These public pension plans have some unfunded liabilities that were relatively significant. Let's call it plus minus 20% of their required benefits to be paid out were unfunded. Like if you could get a 1 to 3% allocation into Bitcoin, and if we were right, and if it did a 10x, you could, the 2% allocation could basically wipe out the unfunded liabilities of the pensions. I mean, I do think that Bitcoin can go to $1 million. I think it's probably over the next, call it 2 to 5 years, that we'll see that. I do think in the shorter term, like the next 18 months, it wouldn't surprise me at all if we see Bitcoin at.
Sean Bill is CIO at Blockstream, leading its asset management division with 30-plus years in institutional investing.
A veteran of Prime Meridian and Santa Clara VTA, he's a pioneer in bringing Bitcoin to the world of traditional finance.
Now we've got, I don't know, I think it's like last time I looked at it was like 20 different states that have legislation to try to create strategic reserves. They're aware of the, how do I say it without stepping on toes? I mean, like the prolific spending of Washington, D.C. And prolific spending has consequences. And we've seen that with how the dollar's purchasing power has been slowly eroding. And so I think that's why we've seen this tremendous grassroots movement throughout the United States to develop these Bitcoin strategic reserves. And coincidentally, a lot of the state treasurers are sitting on these pension boards. If they are becoming comfortable with the idea of establishing a state strategic Bitcoin reserve, there's reason to think that they're going to be comfortable with the pensions also owning Bitcoin as an asset in their portfolio.
Hey guys, welcome back to Less Noise, More Signal, and welcome Sean to the show. Cool to have you on the pod.
Yeah, thanks for having me. I'm really excited to be on the pod today.
Yes, it's great. So with you, obviously, I want to talk about all things asset management and Bitcoin because you are with Blockstream, and I think you can introduce yourself in a minute. But it feels like you guys have a front row seat to what's happening with all the institutions investing into Bitcoin. And obviously from there, I've also heard that you guys have been pitching to some of the institutions like pension funds. And so it would be quite interesting to sort of understand what arguments cut it with them and maybe what not. And then, maybe also given your background in portfolio management, it would be amazing to talk Bitcoin and portfolio theory as well. So just maybe for folks to understand, who are you and who is Blockstream Asset Management? Because I think most of the people know Blockstream as a Bitcoin technology company for what they've done, but are not so familiar that you sort of have this asset management vertical as well.
Yeah, no, I think that's right. I think it's a relatively new development here at Blockstream. I think most people rightly think of Blockstream as a technology service provider to the Bitcoin ecosystem. And that is really the core ethos of the company. For people that follow Blockstream, I think they, would recognize it as, a company that has produced a lot of open source code to really try to solve problems that Blockstreamers are having with operating in the Bitcoin ecosystem. So most famously, probably our Liquid network, the layer 2 network is really quite well known. The AMP, which is kind of the walled garden that helps financial companies maintain AML and KYC policies so that they can tokenize assets and stay within regulatory bounds, if you will. But we also have a consumer division that does green wallets, the famous Jade cold storage wallet. And we have an enterprise group that works on HSMs and Bitcoin treasury software and things like that. So it's a really pretty broadly diversified company. It was started in 2014 by Adam Back and a couple of co-founders. And they've been building for a decade, trying to really create the software that people need to build on top of the Bitcoin main chain. So that's kind of Blockstream, and that really is the core business for the company. The asset management really kind of came about and pretty randomly. I started investing in Bitcoin in 2016. Really first started hearing about it in 2014. Surprisingly, didn't hear about it sooner than that. I was a little surprisingly, when I look back at it, I'm like, gosh, I'm surprised this didn't cross my radar earlier. Um, I was in a macro hedge fund, and I've been in global relative value fixed income for quite a long time. And a friend of mine uh, had suggested I take a look at this Bitcoin. And so I was like, geez, that's interesting because I love Austrian economics. Studied that in college. Big fan of that whole mindset of thinking. And so when I first saw it, I was like, oh, this is interesting. Definitely an interesting concept. And started following it. And when it first hit 1,000 was when I really started to really pay attention. So I think that was like 2016. And then so when it came back into the 250, I had set alerts on it. It really does chart really well. I really think of, Bitcoin, and I'd say maybe more broadly digital assets are very reminiscent of futures trading. They move in a similar fashion to futures. They you can use a lot of leverage with these instruments, and they chart, and they're very technically driven markets. So I started out at the Chicago Board of Trade in 1994 in the corn, wheat, soybean pits. So like back when it was open outcry. So my wife likes to say that I'm the most evolved dinosaur. I've survived the open outcry, but spy for a quarter. It's solid. you know, um, those days are gone, obviously long gone. But so I kind of stumbled into it and was playing around with it, and was really more of an educational thing for me. So I unfortunately, I didn't have massive size or anything like that, like some folks that were lucky enough to really embrace it early. I was more kind of trying to figure it out. And by 2019, I was pretty convinced that it was really a legitimate answer to the debasement of currencies. And, at this point, we've been 10 years in ZIRP and zero interest rate policies and quantitative easing. So, I was definitely kind of starting to think, okay, how do you protect yourself from this stuff? And at that time, I had transitioned into managing public pension plans in California, the Silicon Valley. And one of the things that we did with the public pension plans, we started to try to diversify them from being traditional 60/40 plans into more like a kind of almost like a Yale endowment model, but more liquid than a Yale endowment model. So not quite as heavily tilted into the privates, but really trying to diversify across asset classes. So adding things like to stocks and bonds, which are the traditional 60/40, adding things like real estate, adding things like farmland, timber, mineral rights, getting into private credit. And I started looking at Bitcoin, and I thought, boy, this is super interesting because it's super uncorrelated to other asset classes. And it has volatility that tends to skew to the right tail, which means that it has many more significant up months than it does down months. And so if you have a positive skew on the volatility combined with a low correlation to other asset classes, it's kind of like a magic ingredient when you're trying to, make a portfolio. And so the way I describe it to folks is it's kind of like baking a cake. When you're trying to put a portfolio together, you need a little bit of sugar, a little bit of flour, a little bit of salt, a little bit of yeast. And when you bring them all together, you make this beautiful cake. And so I thought Bitcoin really could act like yeast. It could really be something that could help, grow these portfolios. So I started socializing the ideas with California pensions in 2019. And by 2021, we were a small holder of Bitcoin in the Santa Clara VTA's pension funds. And that was, as far as I know, the first U.S. pension fund to actually hold Bitcoin. We custodianed over at Fidelity Digital Assets via Skybridge, which was a fund of funds. And that was how we gained our initial exposure. We had 45 basis points of exposure to Bitcoin. And when I was trying to socialize the story with the pensions back in 2019, in fact, we just were invited back to go speak at the State Association of California Retirement Systems next week to actually revisit this topic, because we gave a speech in 2022 talking about how we did this and why we thought it was important for other pensions to consider adding Bitcoin to their portfolios. And so they wanted us to come back and recap that. We're going to do that next week, Adam and I. And so the idea being that, these public pension plans have some unfunded liabilities that were relatively significant. Let's call it plus minus 20% of their required benefits to be paid out were unfunded. And so I thought, looking at Metcalfe's law, looking at how Bitcoin had been tracking Metcalfe's law, that it was pretty clear that you could make a case for $100,000 Bitcoin back then. And in 2019, it was like 7,500 when we first started recommending it and writing memos. By the time we got in 2021, I think we got in an average price like 17,000. So it moved up a bit. But my thought was, like, if you could get a 1 to 3% allocation into Bitcoin, and if we were right, and if it did a 10x, you could, the 2% allocation could basically wipe out the unfunded liabilities of the pensions. And I thought it was a very asymmetric bet, a very limited downside risk. If we're wrong, let's say we lose 50% of the value of the Bitcoin, right? So we lose 1% on a 2% position. We can make that back in a quarter. And, that's really not destabilizing to a pension fund. However, if we're right, we get it right, we wipe out the unfunded liability for the beneficiaries of the plans.
Yeah, I see. Very interesting.
It's kind of how we got there into that space.
Yeah, I see. A lot of history there. That's so interesting. I mean, how is it gonna work next week, if I may ask you? Like if you're gonna be in front of these guys again, and now Bitcoin has actually moved up to 100,000, and so maybe this 10x case, you can't really reiterate that anymore because we're here. But at the same time, it's sort of a vindication for your arguments that you've brought for a couple of years ago. So how is the pitch going to go this time? Is it going to go like, okay, we're moving up to 1 million, and now that we've been at 100, we can also go up there. So the 10x is still there. And how do you think you're going to win them over, so to say? This show is brought to you by NewHedge. In a market driven by complexity, insight is everything. NewHedge is a dedicated Bitcoin analytics and intelligence platform delivering cutting-edge analysis, on-chain metrics, and real-time market data. With 200 plus proprietary indicator, live derivatives data, and adoption metrics, NewHedge provides the depth and precision that serious market participants demand. Backed by some of Bitcoin's most prolific investors, NewHedge connects traditional finance with Bitcoin's evolving landscape. Gain your data edge today. Sign up for free now at newhedge.io and get 50% off your advanced subscription with the code SIGNAL.
Yeah, I mean, I do think that Bitcoin can go to 1 million. I think it's probably, over the next, call it 2 to 5 years, that we'll see that. I do think in the shorter term, like the next 18 months, it wouldn't surprise me at all if we see Bitcoin at 200, 250, right? Which is a great outcome for these folks. So my pitch to the pensions is really, Bitcoin still has a low correlation to equities, runs between, let's call it, 15 to 20 on the correlation there. On bonds, it's generally going to be, call it, 15-ish. Gold, 12-ish. So it still has a very nice diversifying impact on the portfolio. And the return profile still skews very strongly positively to the right tail. So again, kind of, instead of having a kind of a regular bell curve, it looks more like a kind of like this, and then with a fat tail, right? And so that is a very valuable asset when you're constructing a portfolio. So my take to the folks is, look, you now have BlackRock has come in and has kind of gave substance to what we were recommending 5 years ago, and saying you should be looking at a 2% allocation in these portfolios. Well, BlackRock has now come in and given that the stamp. And folks can do it with their ETFs, or they can go direct, or they can look at alternative investment vehicles to get that exposure. And so I think that, for the folks in the pensions, that, another side benefit of having an allocation to Bitcoin is that this is an opportunity for the everyman or woman to have exposure to Bitcoin. So when Bitcoin's sitting at $100,000, it's kind of, we're getting to that point where probably most people will not own a full Bitcoin, right? But and most of the folks that are working in the public sector, pensions, are not really following Bitcoin. They're not really spending time on Bitcoin. They haven't got a Coinbase account. So if the investment teams at the pensions doesn't step up and get an allocation into these portfolios, most of these folks will not have any exposure to Bitcoin. And so I really see this as a great way with the pensions, who have sophisticated teams of investors and sophisticated consultants, to really provide a gateway and an opening for the bus drivers, the train operators, the policemen, the firemen, all the folks that maybe are not really financially savvy or following this stuff that closely, for them to have an opportunity to gain exposure to Bitcoin. And I think that's an
Yeah.
important thing for society.
Yeah, I guess it's sort of their fiduciary mandate and duty to do this, one could argue. But I mean, when you were speaking of this correlation point two, to equities, I guess you're referencing a sort of a longer time frame, because that's what I'm hearing quite a lot. Like there people are arguing, well, I mean, yeah, correlation is I see that, but it's been moving upwards ever since, especially now that we're sort of that Bitcoin has reached mainstream, and is really entrenched in the financial system itself. Won't the correlation just keep on increasing, which then also sort of means that maybe this upside potential isn't that big anymore, and then also it's not that portfolio diversifier that it used to be. What is your take there?
Yeah, I mean, I think we definitely started to see a change in correlation. So the data I'm referencing is going back from April 1st, 2015 through March 31st, 2025. And just kind of going over the 10-year standard. Because most pension funds, when they're going to be looking at making decisions on asset allocations and making strategic allocations to new assets, are going to look at a 10-year horizon. Now, with the onboarding of Bitcoin into PayPal and Square and things like Cash App and things like that you did see the correlations move up, and you got much more of the risk on, risk off trade. With the BlackRock ETFs and other ETFs, that correlation has increased in the short term. But actually, in the last 2 weeks, when we had the most recent sell-off, before we had this most recent increase, we had so much choppiness in these markets. We actually did see Bitcoin kind of break away from the market. When the equity markets were selling off, Bitcoin held its own and stayed steady and kind of started grinding higher, which to me was very encouraging. I mean, I think, we could pick different time frames and different time horizons. I kind of stick with the institutional standard of, a 10-year time horizon. And I think that on the most recent numbers I saw in Bitcoin correlations, they were 0.15. So I think it's actually, it does go through periods where the baby gets thrown out with the bathwater, I guess is how I would describe it, right? It's like Warren Buffett says that, when there's blood in the streets, that's the time to be buying. And right now it's pretty easy to just dump your ETFs, dump your futures, dump your stuff. And so I think we are seeing periods where Bitcoin is moving more in line with risk on, risk off. But I think that the story is so compelling that it's really still quite a compelling investment for institutional investors.
Mm.
Yeah.
Yes, I understand. Yeah, I mean, I'm hearing from other hesitant institutions like two other arguments, and it's what gives Bitcoin its value, because they're like, okay, I see, I know what you're saying here, but I still struggle to see its value. Where does it come from? And I sort of need to know the value to justify any sort of allocation. And then also, how would I value Bitcoin? Because that's something these people often want to do as well if they take it into the portfolio. So can you
Yeah,
address these two questions as well?
definitely. Definitely. We get that question a lot, particularly with endowments, foundations, and pensions. So I do believe that, Bitcoin will ultimately be the world's first non-sovereign currency. On the way to that path, um, it needs to prove its ability to be a store of value, right? And I think that's kind of where we are in the journey of Bitcoin's development, that we are really right now kind of showing that Bitcoin can be and is a good store of value for investors. So if we think of it in those terms, and a lot of people use this analogy, It's similar to digital gold, right? Or gold. It's the digital version of gold. And why is that? Well, there's kind of three primary reasons. One, it has a limited supply, right? So we all look at the stocks to flow ratios in terms of the new gold coming into the market versus the existing supply. And the same thing with Bitcoin. We look at the new supply coming into the market versus existing supply. We know that Bitcoin is limited to 21 million tokens, 21 million coins. So it's actually even more sound than gold, right? It's impossible to counterfeit it. So both gold and Bitcoin, you cannot counterfeit them, right? So that's another really important characteristic or trait that they share. And then the third is that both are fungible into any currency anywhere in the world. So, we can walk in with a gold maple leaf from Canada and Japan and convert it into yen. We can also convert our Bitcoin into yen, or we can do it into, Mexican pesos, whatever we want. So I think those three characteristics are really what give Bitcoin its value. Now, if we kind of continue to walk that analogy along, if you think about what is the current value of gold, well, it's about $18 trillion. With Bitcoin currently roughly at 100,000, we're right at $2 trillion market cap, just under. So that would imply that if, Bitcoin just reached parity with gold, we can say that Bitcoin should have a value of approximately 900,000, right? Of 9x from here. And I think that's a pretty conservative way of looking at things. I actually do think it vastly understates the contribution that Bitcoin will make over time to society. So I think that it will be significantly more than 18 trillion. But that's just kind of like a good starting map, a good starting place. That I think when you're talking to trustees and investment officers that have that fiduciary liability and that are watching and thinking about how do I sign off on these things, I have to make sure I understand what I'm signing off on. I think that the gold comparison is one that they can wrap their hands around and they can be like, okay, I get that. I understand that. That makes sense to me.
Yes, yeah, that's a great point as well. Interesting. I mean, there's this other argument that's thrown at me all the time, which is sort of Bitcoin is really just a tech stock. It's just another tech stock, and so I don't know if you have any thoughts on this, because I think if one looks at it from a portfolio theoretical perspective and you compare like stuff like the Sortino ratio, R squared, batting averages, stuff like this, you actually figure out, depending again on which time frame you use, but if we go for a longer time frame, that there's actually some alpha there which distinguishes Bitcoin. And any thoughts on this as well?
Yeah, I mean, I think that a lot of people would, so like BlackRock famously published the piece in December of 2024, and they actually made that comparison that, if you were to look at the Magnificent Seven and the impact that they have on the portfolios of institutions, that you could take a look at Bitcoin and say, okay, based on Bitcoin's volatility, um, from a risk adjusted vantage point. So thinking about things and how much risk we're taking, you can make a strong case that Bitcoin could be a 2% allocation in the portfolio. If you started to get above that, then it starts to be actually a bigger contributor to risk than say the Mag 7. So I think that there's no question that folks are looking at it from that lens of, Bitcoin is similar to these tech stocks. That's where BlackRock kind of defaulted to and how they were thinking about the market and how they're comparing it in terms of position sizing. Whereas, the example that we just walked through being more about digital gold is another way of looking at it. So I think there are multiple ways that you can look at Bitcoin. Some folks may be more comfortable thinking of it like a technology stock. Others might be more comfortable thinking it more like a commodity. And it is regulated by the CFTC. So I think, there's definitely a lot of thought that has gone into that as, you could think of it that way. But both ways of looking at Bitcoin, I think, are valid and, are well thought out and well constructed.
Yeah, no, that's interesting. No, I was just recently looking at it myself, and then when it comes to this Sortino measure that I referenced, I think, there's a case to be made that Bitcoin has delivered like better downside risk-adjusted returns compared to tech stocks over the past 10 years, and which is also interesting. And then this other metric, where
Yeah,
you sort of try to figure out how much of an asset's return can be explained by the return of another asset. And so if you do this and you compare Bitcoin to tech stocks, you also figure out that the percentage of Bitcoin's price move, which is sort of explained by these tech stocks, is sort of also rather small, which then sort of corroborates what you're saying or reinforces
sure.
it's not that close to these tech stocks, at least in what is moving the price, even though they might be sometimes moving in lockstep, but it's actually other factors and drivers that are at hand here. So that's also
Yeah,
something I think which is quite interesting to point out as well, right?
absolutely. I mean, the director of research from Fidelity Digital Assets, I recently gave a speech at the MicroStrategy conference and put up some great slides, which I think are really fabulous. So when I'm trying to think about, okay, how do I make the case for, Bitcoin with institutional investors, it's always more impactful if you can find outside third parties research to support your thesis, right? Because if we look at Fidelity, that is the largest, one of the largest retail brokers in the world, right? If we look at BlackRock, that's kind of like one of the largest institutional service providers to investors. And so when I find those research pieces from those two, I think that adds a lot more credibility than if I just spool up a piece and say, okay, here's my research and here's what it looks like, and but if I can point to Fidelity, point to BlackRock. So to your point about the Sortino ratio, which really for your audience, the Sortino ratio, unlike the Sharpe ratio, which looks at the volatility less the risk-free rate uh, return, the Sortino ratio doesn't actually penalize. Oh, sorry, let's be the Sortino ratio doesn't actually penalize upside volatility. So the Sharpe ratio kind of, if you want to say, kind of penalizes upside volatility, even though that's what we would consider as investors good volatility we want to embrace. Sortino ratio kind of accounts for that. And the Sortino ratio on Bitcoin is like a 2.4. If you go back the last 10 years, going back from April 15 to March 2025. Now you compare that to like US stocks, that's like a 1.1. If you look at international stocks, right? So overseas investors, that's like a 0.45 on the Sortino ratio. Gold's like a 1, bonds are actually negative. If you look at short-term treasuries and intermediate-term treasuries are actually negative on the Sortino ratio. So again, if you were to compare Bitcoin on that basis, then it's a real standout winner. And most retail folks will not have heard of the Sortino ratio, but most institutional investors will be well aware of it.
Yes, exactly. I mean, so once you have convinced allocators to allocate to BTC, one of the key questions I'm then hearing is also like, and you alluded to it already, like what is the minimum holding period, for a Bitcoin allocation? And you said like BlackRock is sort of, yeah, also has probably something to say there. And then also sort of what is the best rebalancing frequency for a Bitcoin allocation? Because again, in a retail context, most of the people probably don't do the rebalancing because they just hold on to their assets indefinitely. But like in an institutional context, something like this is really important because otherwise, if you don't do the rebalancing, you can destroy like a client's risk portfolio and profile that you figured out. And so maybe you have some thoughts to share there as well.
Yeah. So that's a very interesting question because with Bitcoin having such a strong right tail on the upside volatility versus the left tail, which would be downside volatility, meaning that there's many more months where it has significant upside than downside outside the bell curve, right? The tails. That would, if you go back to Sheldon Natenberg and option pricing and volatility theory, kind of the classics on option pricing and what have you, you would definitely want to be letting your Bitcoin position run longer and rebalancing less frequently. Now that does go contra to your point, goes contra to institutional investors' what they typically do. So an institutional investor will typically rebalance quarterly, which is, if you think about it, while you're not going to get that full impact of that asymmetric return profile of Bitcoin, if you do that, you are naturally kind of enforcing a value-oriented orientation, right? So when Bitcoin's up and you're harvesting gains from there to go buy stocks that might be down or bonds that might be down, you're actually kind of functioning like a Warren Buffett investor, right? You're harvesting gains and you're buying stuff that's on sale. On the flip side, if you're doing the quarterly rebalancing, and I think Bitcoin Magazine has some great charts on this stuff too, in terms of like the rebalancing and the growth. If like when we had the recent sell-off down to 72, 75,000 on Bitcoin, if you're timing that with your, harvesting out of, let's say, your bonds or your equities, which are all kind of squishy, but let's say, you're rebalancing, at least you're buying it on the break, right? And you're buying it with a value orientation. So, from that standpoint, that is a good tool to have. My advice to most institutions would be, size the Bitcoin position appropriately where you don't feel like you need to rebalance it as frequently. And so, maybe you can be more tactical and have a investment committee meeting to determine when you want to take some money off the table and rebalance, but let it run and get the full benefit of the Bitcoin exposure as much as possible. So that would be my advice.
Okay, I see. Yeah, great point. Well, I mean, on the allocation and the portfolio theory, it's pretty clear, as we just tried to establish, that there is benefits to adopting Bitcoin to a portfolio. But then, even if I show all of these arguments to these institutions, I've been doing this as well in the way I've worked with them. It's always the question then, well, you're referencing numbers from the past, and who's sort of reassuring that this is going to happen in the future as well. And obviously, I think nobody can do this, but then still, like, how would you go about arguing that something like this can still go on? I mean, like, concretely speaking, is it that you're turning to the corporate BTC Treasury adoption that we're seeing? Is it to the sort of public adoption that we're seeing with these maybe states in the US, or what are you referencing to really show that the ball is moving and things are actually happening?
Yeah, well, I mean, so I would definitely reference those things. I think they're very important. I would, try to base that conversation also on the digital gold, make sure that they understand that argument, because that does give you a lot of upside from here. And investment managers are notorious for kind of looking in the rearview mirror and kind of like, oh, well, we should have been doing that. We actually did it at Santa Clara VTA. We were actually one of the first ones in. We were, I would say pioneers within the pension world in terms of getting Bitcoin into the portfolios. So we're true believers. And, I think that we're now seeing this with the advent of, the ETFs, the exchange traded products, the ETFs that are here in the US. There's a lot more air cover, if you will, for investors that are fiduciaries that are reporting to beneficiaries, right? So now that BlackRock's in there and is advocating for a 2% position, that gives a pension board coverage that we just didn't have when I was doing this back in the, in 2019, 2021. When I was going into those investment meetings, they look at me like I had three heads. Like, what's this guy thinking? Putting our money into some software code. But when we do explain it, we walk them through it. Now, if you think about this grassroots movement that's occurring in the United States with government or state-led Bitcoin reserves, strategic reserves, I think this is a super interesting development here in the US. I think obviously with President Trump's speech in 2024 at Bitcoin Nashville, that was like a big knock on the door. Like, okay, if the administration changes, there's going to be a very different posture towards Bitcoin. I think part of that is because President Trump and his family were debanked and had gone through some of the challenges and trials that are not unfamiliar to Bitcoiners. Um, I think that, that kind of made it okay to actually talk about, the idea of what contribution Bitcoin can make to a sovereign entity. So now we've got, I don't know, I think it's like last time I looked at it was like 20 different states that have legislation to try to create strategic reserves. And we just saw New Hampshire coming through. I think that part of that is driven by, they are aware, particularly at the state level in the US, they're aware of the, how do I say it without stepping on toes? I mean, like the prolific spending of Washington, D.C. And, that prolific spending has consequences. And we've seen that with how the dollar's purchasing power has been slowly eroding. So if we go back to the beginning of the pandemic, the dollar has lost 25% of its purchasing power. States are definitely aware of that. And state treasurers are trying to figure out how do they shore up their balance sheets so that they can continue to provide the services that they need to provide to their constituents. And so I think that's why we've seen this tremendous grassroots movement throughout the United States to develop these Bitcoin strategic reserves. And that's a very big focus item for Blockstream. We feel like that's very important to help those state treasurers lock down that Bitcoin, custodian that Bitcoin, in a safe way, and then hopefully eventually put that Bitcoin to work, in the marketplace in one way or another. It could be, through a Bitcoin yield strategies, or it could be through borrowing against the Bitcoin if they needed to tap things for, short-term deficits, things like that. So we think this is very positive that the state treasurers are getting in there. And coincidentally, a lot of the state treasurers are sitting on these pension boards. So if they are becoming comfortable with the idea of establishing a state strategic Bitcoin reserve, there's reason to think that they're going to be comfortable with the pensions also owning Bitcoin as an asset in their portfolio, particularly if you can make a strong case for it improving risk-adjusted returns, which is really the number one goal. That's the number one goal.
Yes. So as I'm hearing from you, that would mean if these states were to move, they were actually, or they would be buying Bitcoin on chain, and not just through an ETF necessarily, because and then it would also sort of go well with this strategic element of a Bitcoin reserve, because like I don't want to shit on it, but I heard when this announcement came by Abu Dhabi, that I think the state sovereign wealth fund, that it sort of got an allocation to Bitcoin, but then it did it through these Bitcoin ETFs. I was like, sovereign wealth fund doing it through a vehicle which is sort of hosted somewhere else in another government doesn't sound so sovereign to me after all. And so is this actually the goal? And that's what I'm hearing from you as well. You've been working or have been working with these states and the officials and representatives to do it that way, the actual Bitcoin way,
Yes. So, without naming any names, we are talking to all these folks, and we think number one, we're like really excited to see them enter the space, period. Right. So if, that initial dipping the toe in the pool, and like, okay, let's get a toe in there and just see what the water's like. If that means that, to get them involved, that they are gonna, buy a BlackRock ETF, because it's like the old saying goes that nobody ever gets fired for buying IBM, right? Well, nobody ever gets fired for buying BlackRock, right? And BlackRock is pervasive throughout these portfolios. You get a very high quality of professional management with these portfolios, right? So if we can get them into the pool, that's like a first step. Like, okay, now they're actually thinking about it. They're looking at it. Now they have, fiduciary responsibilities to monitor and provide oversight to those allocations. So they're going to be learning more about these things, right? And so the next step would be to, take possession of their keys, right? And actually own it as a sovereign individual or state. And so that's where, working with Adam Back and the folks here at Blockstream is a real unique opportunity to try to help guide those folks along this journey of getting into Bitcoin. And we think it's important for them to, hold their keys and to have that self-sovereignty over those holdings, because we've seen, what happened with Russia under the Biden administration, that if the U.S. government decides that you don't get to keep those assets, then that's it, right? So we do think it's really important for folks to have that self-sovereignty over their Bitcoin. And we are structured in such a way with our strategic relationship with Kamenu as a custodian, which holds Bitcoin for the UK government at the highest standard of security. That we are structured in such a way, working with Adam and 100 other folks here at Blockstream, that we can help guide them along that journey. So we've been in touch with a lot of the sovereigns, a lot of the states and different folks, and we are trying to create a very simple program for them that's very robust. And one of the other side benefits to this is, rather than paying an ETF company 20 basis points or 25 basis points to hold this exposure to Bitcoin, there are strategies that we can run in the background with the actual Bitcoin holdings to generate a small fractional yield to offset those custodian fees, so that you're actually not you don't have the negative carry of holding the ETF. Plus, you have a concentration risk with being, those assets are custodianed at, exchanges that, if anything happens there, then, it is what it is, right? Once it's gone, it's gone. So we think that it makes a lot more sense to, go the HSM route, work with a custodian like Kamenu, and really lock down your Bitcoin.
Yes, I want to turn to this topic to finish off for sure, like the Bitcoin yield topic. But maybe before turning there, I want to harken back to what you said. You mentioned New Hampshire as a state that has, I think, passed now something on the legislation front. Also, we heard something from Arizona. What is it that they have actually passed? So is it like, okay, they're now ready to buy Bitcoin, and we could expect them to buy it anytime soon, or what is it that was so positive about the recent news that we got from them?
Yeah. So, with the U.S. process in government, these things originate at a committee level in the state house or the state senate. And then they kind of come up together for a merger to kind of, get the House and the Senate, just like at the federal level. The state level is not that different. So they have to get to where they're all on the same page. And then they have to include it into legislation for the governor's signature, right? And then when the governor signs it, then they now have authority to move forward. That probably means that they have to establish investment committees. They have to, establish who the service providers will be, et cetera. So it's not like with the stroke of a pen, when the governor signs that legislation, that tomorrow morning we're going out and buying Bitcoin. I think the Arizona one was, I think they have 31.5 billion in cash, and they said up to 10% of the cash could be held in Bitcoin reserves. My guess is that will take a little bit of time for them to establish the framework and to make sure that they're doing it the way they want to do it to secure that Bitcoin. That's where companies like Blockstream that are really strong on the software and technology side, I think can really we kind of, I think, within the industry are kind of the Switzerland, right, of Bitcoin. We've always provided open source code. We've always really made all of our tools available to everyone. We've not been super commercial about monetizing everything. We are trying to become a little more commercial, but our ethos, I think, is unchanged, that it really is, Bitcoin community first. And we don't fool around with any of these other altcoins. We're not interested in Ethereum or the ETH heads or Solana or, any of these other things. And we always try to steer folks away from Ripple and what have you. And, there's that great saying of, if you have the most secure and the most diversified, network, why would you go for the second most? Right. So we think that, Bitcoin will win the day. We think that it's like the black hole of blockchains. It will suck every other blockchain into its, orbit and then swallow them. And that's where the layer 2 technologies and all the apps that we're building to sit on top of the layer 2s will really give the functionality of what you can do on these other chains. And so I kind of maybe went off on a tangent there, but I think we're very excited to see the states come in. We're very excited to try to help them get this done right, to custodian their keys themselves, and really to hopefully steer them away from some of the other dodgy coins that are out there, which could give them the negative headline risk that I think they are been so focused on trying to avoid.
Yes, I see. Interesting. Given that we're gonna see these states move in, and combined with all the corporations that are now adopting Bitcoin on the treasury side, like what will the impact be on Bitcoin itself, and it's particularly its price and maybe volatility, especially downside risk. Isn't it going to be the case that because a lot of these players will probably be sort of strategic buyers that are not prone to selling on a whim, that on the downside this could also have some sort of stabilizing effect?
I think that's true. I think as the market has been maturing, that the volatility has been, declining, right? And so as Bitcoin grows and grows and grows, Bitcoin at 100,000 is just under $2 trillion market cap. If Bitcoin goes where we think it goes, into the 250 in the next 18 months, 12 to 18 months, that's going to be a $4 trillion market cap. The bigger the market cap, the more stable the entity, right? The more it can absorb selling and what have you pressures. When Bitcoin was nascent and a toddler, remember Bitcoin's only 16 years old, so you have to keep that in mind. This is a new technology. If we think about where the internet was at 16 years versus where it is today, Bitcoin's made tremendous progress. So I do think that this adoption by the sovereigns, by the corporate treasuries, and I expect that the corporate treasuries will be a little more aggressive about having their Bitcoin work for them. But I think that, as these corporate treasuries, as these sovereigns are getting more and more involved, I do expect that the volatility will dampen. It will become a little more manageable for investors.
Yes, I would say so as well. Moving on to the last topic here. At Blockstream, you have various different Bitcoin-based investment solutions, and you just said that the corporate treasurer might want to have their Bitcoin work for them. I guess it's also a demand that we're seeing, out in the market at the bank that I'm working for. And so can you maybe elaborate? I think you have the BTC Yield Fund, a Bitcoin Income Fund, and then also a BTC Alpha Fund. Maybe you can quickly talk about these different products and sort of, add some more meat to the bone for each of them.
Yeah. So, this was a super interesting thing because I was at a hedge fund that was a, private credit fund that was focused on the fintech sector and was working pretty hard in that space. And we won the Bloomberg Hedge Week multi-strat credit hedge fund of the US award in 2022 and 2023 back to back. And prior to that, I've been named to the CIO 100 list by CIO magazine in 2021. And so the idea of leaving a very successful hedge fund to kind of take a shot on a startup that wants to get into, hedge funds was kind of like, oh, this is a big gamble. But then as I got talking to Adam and talking to the team at Blockstream, Michael Minkovich, the chief operating officer, Adam, some of the other folks that are here, I was like, the way it was kind of laid out to me was like, look, Blockstream has always tried to solve bottlenecks that were affecting Blockstreamers. And one of those bottlenecks has been that, the credit markets need to be more developed for Bitcoin and the capital markets need to be more developed for Bitcoin. And so we started kind of poking around with this idea of like, okay, if we were to try to attack those issues, how would we do it? Like, and the biggest challenge that we found was there's a shortage of fiat, in these markets. So there's this $2 trillion of wealth that's been accumulated and, you can't really, pledge your Bitcoin and get an ISIN to, borrow against it here in the US or elsewhere. And we thought, what if we could bring dollars in to this market to try to unlock and really try to accelerate what people like Unchained and Debify and some others are doing. Tether does this too with the institutional market. And those are all, really impressive teams. But we felt like they could use more capital. And so we kind of have a somewhat unique access point with our background with pensions and endowments and foundations, and having been a pioneer in the space, that we thought, who is the natural long on the dollar? And the natural long dollar investor is the pension, the endowment, the foundation that has a very long dated liability. So that led us to the idea of, if we created an income fund where people were investing dollars to lend against Bitcoin, the best structure to do that for those types of investors would be a hedge fund. And that's how we ended up with the idea of doing a hedge fund. Otherwise, I think we would have just done it through our treasury, to be honest. I think with the Bitcoin yield fund, the Bitcoin alpha fund, we just use our own Bitcoin and do our own alpha funds. But when we needed to get fiat, because we don't sell our Bitcoin, we never sell. I'm not surprised probably for anybody listening to this podcast. To bring in these other naturally long dollar investors, we needed to create funds. And so we said, okay, if we're going to create an income fund, we may as well make a suite of funds, so that there's like, a swim lane for yield, a swim lane for income, a swim lane for alpha. And of course we have our, passive, BTC program that we run with Comparative as well. So we kind of wanted to be able to offer them, a mix of products based on where they are in their journey into Bitcoin. So if they have an ETF and they're further along the journey, and now they're looking for an active manager to be a satellite position around that core ETF position, that's our alpha fund. And our alpha fund is really focused on trying to improve capital markets. So looking at our options market making, high frequency trading, inter-exchange arbitrage, just really trying to help move the flywheel faster and really try to tighten up these spreads. Over time, we hope that we eventually put ourselves out of business, right? That these markets become much more efficient and that these excess returns are no longer available. But right now they are. So while they're there, we want to try to narrow it. With the income fund, most pension funds that are crypto curious, I would say, that maybe want to dip a toe into the Bitcoin world but aren't sure how to do it, we think this is a great product for them. This is a product where they put dollars in. They all have private credit allocations. They all understand direct lending. They all understand asset-based lending. All we have to really do here is really educate them on the value of Bitcoin as a pristine collateral. And so that's that fund, And then on the yield fund is really kind of geared more towards the treasurers, the state sovereigns, the corporates, maybe some of the large hodlers. And there we're trying to basically try to capture yield or create a yield on Bitcoin, which is not an easy thing to do, as anybody that's tried to do it knows. This is extremely difficult because it is a bearer asset. But we think that we have some strategies that are relatively unique that can generate a 2 to 4% type of yield with very minimal risk to the Bitcoin. Now, other funds or service providers out there are talking about 6 to 8% returns on Bitcoin. We don't really understand how they're doing that. We're not sure that that's really doable. We think that you could end up reading about that as being another BlockFi or Celsius down the road. The approach that we're taking is much more conservative. We're just looking to try to make like a money market fund. If we can, take a portion of the Bitcoin, offset your custodian cost, that's a win, right? If we can generate a little bit more on that, so you're actually coming out net positive, that's a win. But we're not trying to shoot the lights out on that strategy. And then, the passive is just, like I said, kind of tied in with Komenu and really trying to take advantage of the, top tier security that they offer to the UK government and other sovereigns.
Yes, I see. And I guess these funds, they're all available and like to the institutional clients only, right? That's the clients that can
That's right.
access it. But that's also where we come full circle to maybe what you said in the beginning. That like if institutions, pension funds, all sort of these big money allocators come in and sort of use these funds. Indirectly, the normie, the retailer will profit from this because it's ultimately their money that the pension fund is sort of allocating, and I guess that's sort of the strategy that you guys have here as well. So because
Yeah.
obviously that's an argument that I can hear Bitcoiners say, like, okay, again, it's just the institutions that are going to profit off of this, but the question is like, how do we give it back to the normies?
Oh yeah, no, for sure. And our goal is definitely, this is kind of layer one of the cake, right? And we want to try to, have multiple iterations where we are bringing this to retail. But you got to kind of start and build momentum first and prove out the strategies with sophisticated capital, right? That can take, the volatility. So, ultimately, big picture, we want to have it where you can pull up your green wallet, your Blockstream app, and, you hold whatever, 3 Bitcoin, and you say, Sean, I'd like to deposit that and try to earn a money market yield on it. So I'm going to hit that button. And, or, hey, Sean, I need to buy a car. I want to borrow 40,000 against my BTC. We want to be able to hit that button. So it would feed out through our income funds. So that's a couple iterations out, because when you're dealing with retail and when you're dealing with borrowing and lending in certain markets, there are different regulations. Our funds are all offshore and only available to offshore investors and U.S. tax exempt investors as well. But they're not available to a taxable U.S. investor at this time. But we're hoping that as the regulatory clarity improves with the U.S. and as President Trump and the administration are able to move these changes from executive orders into legislation, which gets approved and signed by the House, the Senate, and this president, then that we'll have that opportunity to really provide for the democratization of access to capital, because we think it's super important for countries like El Salvador. Adam and I were down there recently. And, down there, people are unbanked, right? I mean, 80% of the population doesn't have a bank account, but they all have a phone. And they can all save with Bitcoin. And they can create this self-sovereignty and financial security for themselves through, an app like a Blockstream app or other apps that are out there. And so that's where we're trying to move towards. We want to ultimately get this mission out there to all the people.
Yeah. Yeah, it's definitely a great vision, and then also a sort of trajectory that I can see happening at some point, just because it's been one of the core philosophies of Bitcoin ever since, banking the unbanked. And I think we will get there finally at some point. So it just takes a couple of iterations, as you said. Well, Sean, thanks a lot for sharing all these information and insights with us. If you don't have anything else to add, I think we'll leave it at that. Any last words?
No, I think really love what you guys are doing on this podcast. Really enjoy watching it, and really appreciate the opportunity to share what our vision is for Blockstream.
Yes, great. Cool, Sean. Have a great one. See you around.
Thank you. You too.
Bye.